Hey, my name's James Nicholson. Welcome to my channel. Thank you. Thank you to everyone that subscribes to the channel. We've just hit 8,000 subscribers, so I really appreciate every single person that took the time out to do that. In this video, we're going to talk about why house prices have still got a way to fall. How long might that be? And why is it taking so long for house prices to actually go down? So, if you didn't and you weren't one of the 8,000, you can still join us. You can still join us on this journey together by smashing that subscribe button and hitting the bell notification. I think there's a good chance, a very good chance, that we'll hit 10,000 by Christmas. And we're likely to hit 1 million views this month, which is mind-blowing. While you're here as well, make sure you smash the like button, tickle the like button, just do something. It's there, guys. Press it. That really helps us with the YouTube algorithm. Every time you press it, it's actually helping me get closer to that 1 million views, so please do that. So, house prices, they've been on an absolute tear the last few years. They've been going up really, really fast. It didn't make sense, did it? We had a pandemic, we had shutdowns. It looked like we should have been in a recession multiple times. Somehow we've dodged that. Maybe we've fudged the numbers. Some of you say that in the comments. But yeah, logically, house prices should have gone down. They didn't. They did the opposite. And normally when you have really fast growth in anything, stock markets, house prices, inevitably, I can't even say it, inevitably, the price will eventually reverse and go down. Now, there's a lot that is really making buying property difficult at the moment. You've had 14 interest rate rises. Finally, we've got a pause on that, which is good. You've got inflation, which is absolutely taking money out of people's pockets. You've got oil prices and gas prices and electric prices looking like they're going to go up again, which might cause a second bout of inflation. We've had the government printing money like it's going out of fashion. So there's so much that basically means that prices should have gone down. Well, there are more articles around now where people are talking about the impact that inflation is having on house prices. So in real world cash terms, in the last 12 months on a rolling basis, house prices are down 5%, right? 5% down. Now, that's going to drop next month. So on a 12-month rolling cycle, which is what they'll be talking about, house prices may look like they've improved slightly because the October, November, December figures last year were particularly bad. Most of this year has been flat. So that's where we're sitting. Now, these interest rate rises don't bite straight away. And so there are a certain amount of people in the market that need to sell. And I say that it's, from my experience in talking to agents and seeing deals that are out there, I feel around 5% of the market is what we call motivated right now. They need to sell. They'll take an offer. We've got one, should have gone through in August. Probably not going to go through till December now because of probate. But those people, they just want the money. They don't want to mess around. They just want to get their money. They've got this big holiday planned and they can't go until they've got that funding from that, which is fine. So I feel around 5% of the market is motivated. So these are people like landlords that they're getting hit by Section 24 tax. Maybe they were worried about EPCs. They don't need to be so worried now, but they were worried about them. The interest rates are hitting them. So the deal that they were on is not particularly great now. So they want to move off of that deal onto a higher rate deal, which is hitting their profits. And so they just want to get rid of that property. That's around 5% of the market today. Now, that will grow. And I think that maybe by early quarter, the first quarter of next year, you might have 10% of the market that are highly motivated. And that is going to get some fast sales through. So it could be more transactions that actually complete rather than the other 90% that are holding out for a big offer. They might be willing to sell their house, but are they actually going to complete at that higher amount? So that's going to change. As more people get motivated, then prices will start to come down. Now, there is a big lag in all property data. You see, they put the interest rates up, but the problem is people are just sitting on good rates. There are people that are already fixed. They could see the interest rates going up, so they did something about it. And so they're not selling, and they're not putting that property on the market because they're not desperate, because they know that the next property they go into, they might not be able to. Let's just say you're fixed on a 2% interest rate right now, and you've got a 200 grand house, but you want to sell that property. Now you're going to have to get a 6% rate. So you might actually get a cheaper property, could be 175, for example, but the monthly payment might be more because the interest rate is more. So there's a ton of people with a wait and see approach right now, and they're just sitting out the market. We're seeing that in data. There are less people trying to buy. There are less people getting approved for mortgages, but there's not a ton of stock. There is less stock on the market as well at the moment. And so in order to have a price crash, you need tons of people to be desperate to sell, right? In 2008, there were lots of people that just wanted to get rid of their properties fast. And because of that, prices tumbled. That's not happening at the moment. So this year, I've changed my thought process. I feel that we're going to be going down between 3 and 4% this year. I don't think it's going to be significantly more than that because of the lag. However, 2024, I do think house prices are going to go down a bit more, because you're going to see more people that have finally got hit with this interest rate rise. They've come off their fixed rate. They lost their job because we're going into a recession, and there's going to be more motivated people in the market. Now, that's a big opportunity if you're looking to buy properties. Everyone that wants to buy, often what we find, which happened in the last 2 years, is people bought when the prices were going crazy high. But it's better to buy when the properties are actually on sale. And that's what's starting to happen. 5% of the market's on sale, good price, good deals to be had. That will probably go up to, I think, like I said, 10% of the market will have well priced and look that people that just want to sell this stuff quickly. So the market, I think, will keep going down until we have some interest rate drops at the Bank of England. And I think that you'll get those by next summer, maybe a bit earlier. Hopefully the inflation starts to come down a little bit more. And once we start seeing inflation coming down, if we are in a recession, the Bank of England might pivot and do, even if it's a mild, small, little drop in interest rates, all the people that are sitting on the side right now, there's people that can afford to buy, right? There are tons of people that can afford to buy, but they're waiting for the bottom of the market. Now we've had a pause. When we see some interest rate drops, people will start buying again. And that is when the market will then, hopefully have bottomed out a few months after that. So that's what you've got to be cautious on. So if you're looking to buy a property right now, you should be offering at least 15 to 20% below asking prices, giving them the data. Talk about all the negative articles in the Daily Mail and all these other places where they say the market's going to crash, to help you negotiate a better price. Not everyone's going to accept that. 5% will right now, 10% will probably accept those lower offers, cheeky offers, by this time next year, or really early next year as well. You'll start to see that. So I think the market is on a slow moving process down. I don't think it's going to crash this year, but I do think there's some more drops to come. As a buyer, this is a good opportunity. Now's the time to look for stuff. So do go and get some deals. Go and see what's out there. There's some absolutely incredible deals on the market right now. Let me know your thoughts on this. What do you think? Do you think there's much more? What's interesting is, we made this video 3 months ago, there were more people saying the market's going to crash. Now it's been a bit more stable. There are more of you in the comments saying you're not seeing it in your area. So it is going to be area dependent. Let me know your thoughts in the comments. Keep it kind. Do smash the like button, subscribe and hit the bell. And why don't you go and check out this video right here.